Hello, welcome back everyone. If this is your first time here, you're going to find a lot of videos related to home finance, mortgages, saving money at home. So if you're a homeowner or plan to be a homeowner, you might want to follow this channel. This particular video is about bank statement mortgages or bank statement loans. And if you're watching this video or you happen to be looking at it embedded in the article on the website, and you already know what bank statement loans are, they are for self-employed individuals who are having difficulty qualifying for a mortgage because you're taking advantage of all the legal write-offs, and after the write-offs you show a very low net income or potentially even a loss. So it's really kind of unfair for self-employed people in this world who are following all the guidelines that the IRS has laid out when it comes to write-offs, yet you can't, and you're taking advantage of that, and it benefits you every single year except for the time when you need to apply for a mortgage. So I'll just take you through quickly explaining what the program's all about, how to qualify, what's required, and then we can help you if you are looking for this type of a mortgage. So first of all, most lenders will require anywhere from 12 to 24 months bank statements. There are a few lenders that do offer a 1-month bank statement program, but that is managed a little bit differently. I'll take you through that in a moment. So most of the lenders are going to ask you for 12 months bank statements. They're going to look at your average monthly deposits over those 12 months, and then they'll use a percentage of that average as your gross monthly income on your loan application. Then from there, they're going to handle your application and the analysis of your application the same way they would with any other type of mortgage, which is you're going to look at the proposed mortgage payment, principal, interest, taxes, and insurance, and also any other debt, that monthly obligations or debt that appears on your credit report. That all goes on your application, and you have to fit within their DTI requirements. So that's essentially how that process works. There is a 1-month statement, and to me, that's more subjective, where the lender will look at your total activity and balance and deposits and try to make a determination just from 1-month statement as to whether they believe that that the loan amount you're looking for is commensurate with what your activity is on your statement. And it's really subjective. It's, in my opinion, it relies too heavily on an underwriter and their judgment, and which doesn't make me feel comfortable. I much prefer the 12 to 24 month statement programs, but you can always ask about the 1-month program if you'd like, because it's still available. Now, down payment requirements. So this, as I record this, it's all over the board. Months ago, 10% down, even 5% down was available. Then when the pandemic occurred, many lenders stopped doing these programs, and you saw only 25% down. 20% down is fairly common. Now we have a couple doing 15. We had one doing 10% down for a few weeks recently. So all I can say is that it's a moving target, and the best thing to do is check in and see what's available. We'll let you know your best options, and a lot of it has to do with credit score. So the lowest credit score possible for a bank statement loan today, as I record this, is 600, and that would require a 25% down payment. And as your credit score increases, the down payment options also will change. And with regards to credit score, that also plays a huge part in your interest rate. So interest rates for these programs are going to be higher than a conventional loan. So you need to understand that if you're not supplying your tax returns, only bank statements, and the lender's taking a risk. It's also not Fannie Mae eligible, which means they cannot sell this loan to Fannie Mae. They have to either hold on to it in their portfolio or sell these loans to investors. Therefore, there's a premium on the interest rate. And that's also a bit of a moving target too. At one point, it was about a 1 to 1.5% premium over conventional rates. Now it's a little bit higher than that. If the rate and the payment are extremely important to you, you can always inquire about an ARM, maybe a 5 or 7 year ARM. If you don't plan on living in the house forever, might be a good way for you to go. So bank statement loans are available not only for primary residences, but they're also available if you're looking to buy an investment property. So if you're an investor and you're self-employed, or maybe that's what you do for a living, is just flip houses or hold on to them and rent them out. These programs are available for you as well. So that's really, for the most part, that's a really general description on what a bank statement loan is all about. If you have any other questions, you can leave them in the comments below or just call in, and we'll answer your questions. If there's anything else, just let us know. I hope you had a great day, and I'll see you soon.